Hi everybody, welcome to another update on the stock screener. I got a request to take a look at Alphamin. It has been a long time since I looked at it. It has actually done nothing. It's flat, even going down. I heard that semiconductors are not a hype right now, so that's why it went down. And you can see that on the tin chart. Tin is going down. Michael Burry is short on semiconductors, so you can see that already from here. I don't know. I don't know what's going on with the tin market, but this doesn't look good. Anyway, we are going to showcase how we create the following leverage chart with Alphamin, so that you have a clear understanding on how this works. And we are using tons. I always wanted to add Alphamin to our lists. I will consider it as a copper miner. Tin and copper are actually following each other. Okay, so let's start with share count. That is the first thing you need to do. Search the share count. So I see 1.284 billion. 1.284 billion. Let's use 1.3 billion, right? Share price, easy. We just pick it from the internet. Should be 788 million. So we're connecting to the site. To get the quote. So here you see the quote 0.58. And that's coming from Yahoo Finance. We're transforming the data because this is not text, this is number. And load it to the Excel. So now we have the share price here, which is coming from here. and we have 700 market cap. Okay, next up, we look at the enterprise value. What is the balance sheet today? Let's copy this. That's in US dollars. Enterprise value is market cap minus current assets plus total liabilities. Current 87 and non-current 36. So we have quite a good balance sheet. A lot of current assets and not a lot of liabilities. So I like the balance sheet. Okay. Next up, we look at production. What is the latest production number? 3104 for the quarter. 3104. 304 times 4. 12,400. Yeah, that's about the number that I have. Yeah, let's use 12,400 production per year. This will give revenue of 400 million. Now I know that they are building the second mine, and that will add another 7,200 to that. So this is this plus approximately 7,200. So that's for next year. So that will give the following production. Okay. Now the costs. There is a specific formula for the costs, and that's this formula. So this uses the tin price, and as the tin price rises, then the cost rises as well. So we just use this formula. Yeah, that's how it works because of the royalties and all of that. So let's do that. Copy. And this is the tin price, which is currently 23246. So let's say 24,000. AISC is 13. Of course, the new production has an AIC of 15,000, so a bit higher. Not sure how to do that. 15,000 let's add 1000 to that. Okay, just estimate. Of course, this number should change as the tin price rises. So the free cash flow would also change. And that's a difficult one. Yeah. So we do need to have the tin price here. So let's take the tin price from the internet. It's really complicated, this one, because the cost changes with the tin price. So we need to make it more complicated. So tin price comes from here. And load. So this is the tin price. We now can use the current tin price from here. And here we did the same, but plus 1000. There should be another way to do this. 15,000 production. You could average it out with the production, of course. But don't make it too complicated. For now, we can just use this. Okay. So cost should be around 13,000. Let's check this. Oh, it's now 14,000. So it went up a bit. And that's the guidance. And that's the excluding sustaining capex. Well, it's around 14,000. But the tin price has gone down, so now it's 13,000. So it actually works. I mean, $100 more or less is not going to make any difference. Okay. Interest payments. Let's take a look. What are the interest payments? You can find that here finance cost is 9 months, 4.6. 3 months, it's 1.76. So is 1.7 times 4. That's the interest expense. Let's take a snapshot. Okay, now we need to update this leverage chart because this is referring to the wrong commodity price. Right? This should be this. This should be this. Okay, 2 times leverage for Alphamin. Let's look at the EV to free cash flow. We still need to take into account the ownership, of course, but let's put this already. We need to correct tin price. Okay, now EV to free cash flow. What's the free cash flow? Free cash flow is using this production, all-in sustaining cost, etc. We need the capex. How much is the capex? We typically find that here, investing activities. They are using more capex now because they're building that second mine, but exploration already 5 million or 1.5 per quarter. That's 6 million. Not sure if this is going to stay. 6 million, 100 million. How much did I use here? I think 20 million is a good estimate, right? 20 million capex per year. This is a bit higher now because they're building something. But let's take indeed 20 million for the future, for exploration, etc. Okay, then we need to take into account the ownership. 84% of the project. When you calculate everything with payability and 93% payability, ownership of 85%, then you can just use 75% ownership. So let's do that. So the free cash flow that we get here, we need to multiply it with ownership, which is 75% when you take everything into account. So this free cash flow will be indeed times 75% ownership. Same with this one. And I know these are just estimates. These are just estimates. It's not perfect, but you will get an idea about the valuation. Here as well, times ownership. Okay, and then we just pull this down. So now I get an EV to free cash flow of 7. Is that correct? The current tin price is 23,246, and EV was very complicated, divided by, this is in CID, what's this number? I don't know what this number is. 158. Share count times I'm not sure what this is. I think there's a mistake in here. Yeah, this is in CID, US dollars. Net income is revenue minus. Okay, so CID. Yeah, this definitely needs to be CID. Let's just recalculate it. Is the share count times the share price in US dollars, and that's in US dollars. So we need to go to CID times this number. That's in CID, and then we need to calculate the enterprise value. That's in millions. And this is in US dollars. So we need to do this times this number. And here we have our enterprise value, right? In CID. So it looks like this is a good company. Eventually, the cash flows will be higher than the enterprise value, so that's good. And it's cash flow positive. Would I buy it? Not sure, because you need to wait at least 10 years to get your money back. I get some other place which do something like this. So that's much better return. This is not good enough for me, but okay. So what were we talking about? Okay, I have added the 75% ownership. Let's create the chart. 50,000 should be the maximum price of tin. This is 5 times free cash flow in US dollars. So what do we get? So that's the market cap, 700 million. We have currently this chart, tin price at 23,000 here. So it's overvalued to me. Now next year we will have higher production and it's still overvalued because then we are at an EV to free cash flow of 7. This is using the production of next year. So general and administrative, was that calculated in our costs? We can actually calculate this. So what is the cost? Cost is this here plus administrative. Let's not take in the finance costs. So that's about the costs that we have. What was the production? Production was, you got it here, 3104 per quarter. So the costs per ton is this divided by this, 14,596. Yeah, that's about the same. So yeah, 14,596 for the quarter was the cost. If we don't include the administrative things, then we get below 13,000. So I don't know, maybe I should include the SG&A here. Let's add 5 million SG&A. Maybe they didn't include it in the, but they actually did include it. I'll leave it at 0. Let's use these numbers. So EV to free cash flow is going to be next year at 7. Is that a good valuation? Maybe, because this does have a good mine life and exploration upsides. But I think it's overvalued. EV to free cash flow of 7. I can get companies with an EV to free cash flow of 2 and even 1 with Trigon Metals, for example. Why should I buy this company? I won't buy this company. But it has good margins, break even at 1550, 15,500. And the tin price is somewhere here. So there is quite a good margin of safety. But the cash flows are not good enough for me. I would like to buy Alphamin at 500. So somewhere here would be a very good buy at 500 million. Now it's 500 million US dollars. So in CAD, it would be somewhere 700 here. Here would be a good buy. Now it's at 1 billion CAD, which is overvalued to me. So that's the valuation. I think everything is correct now. And if you update the tin price to, let's say the tin price goes to 35,000, then you get this. Then we would get an EV to free cash flow of 3. That's much better, of course. Then we would be undervalued. Yeah. If we go to 35,000 tin, will we ever get to 35,000? I don't know. But if it gets there, then this would be a buy. Yep. With some upside, 30%, 40% upside. But we're not there yet. We are still at 23,000 tin here. So overvalued. Okay, let's put these numbers into my copper miner chart. I will put this here. There are not a lot of tin miners, so let's put Alphamin on the copper miners. Break even is this number. Yeah, that's not going to work actually, because this is 15,000. These are just $3 per pound. I cannot add it here. I'm sorry. But I can add the leverage. Leverage I can add. Leverage is 2. And EV to free cash flow is 7. So I'm not going to add the break-evens. Let's see where Alphamin stands here. Alphamin is actually not bad compared to the other copper miners. Very good EV to free cash flow, 7. Fair value to me. Leverage is 2, not that great. I have companies with leverage of 3 to 7, which is much better in a commodity bull market. Like Trigon Metals has leverage of 11. Much cheaper EV to free cash flow. So I would buy this one instead of Alphamin. Right? So that was the update. I have added Alphamin to my overview now, which I always wanted to do. This has been updated with new enterprise value, new tin prices. So we're set. Maybe a last update here. What's the latest status? This is the 5 times EBITDA chart. We are currently at a tin price of 23246 and market cap of 788. So this is the valuation. We are overvalued, a tiny bit overvalued. The blue line is the market cap. So, yeah, I wouldn't buy Alphamin right now. It's a bit overvalued to me. Yeah. Oh, we don't have the Q3 numbers yet. Let's add the Q3 numbers as well. Equity is 323.08. What did I choose? 378. Oh, I took the total equity, 378. So now it's 360. 360. So actually the equity went down. That's not good. Revenue 239.5. Well, actually not. For the 3 months is 67.8. So yeah, revenue is down. Then we have operating profit of 22.5. That's also down. And net income is also down to 4.8 to 4.6. Actually, that's up. That's weird. Why is it up? Or is it... What did I choose the last time? September. Okay, I took the wrong numbers. It should be this one. 80.7. Operating profit 30.7, 30.8. Net income. Net income 17.8. Okay, so you can see that net income has not gone up. Equity went down, revenue about the same. Yeah, it's making money, but is it making a lot of money? I don't think so. So that's the update, and I'll see you in the next video.